Okay, they don't go away at the end of the year. Okay, so here is the definition of a liability. This is the big, long definition. Probable future sacrifices of economic benefits arising from present obligations of an entity to transfer assets or provide services to other entities in the future as a result of past transactions or events. Wow. I don't even know what that means. Okay. So, well, here we go. Probable future sacrifices of economic benefits. So something that I'm going to have to sacrifice in the future, like paying cash for something, right? From present obligations. So I have a bill, and I have a future sacrifice I'm going to have to make to pay that bill. Okay? I'm going to have to transfer an asset or possibly provide a service as a result of that transaction or event. So when you break it down, it actually makes more sense, but it's a very long definition, right? And I think the most important thing is it's a probable future sacrifice, right? Probable future sacrifice from a present obligation. That's really I think the most important piece there, okay? That's what a liability is. And again, I mean, a lot of these things in accounting I think are really intuitive, right? Like, if you're ever looking at a question, you're going, well, I don't know, what could that mean? Like, look at the word. Accounting is not trying to trick you. You know, the accounting term, it's a liability, right? It ain't good, right? I got to pay it, right? Right, an asset, that's good, right? So you kind of know these words kind of make sense, right? They're not going to trick you with the terminology here, for the most part. So examples of liabilities. So when you see the word payable at the end of something, you're talking about a liability because you have to pay it. It's payable. It's a future sacrifice from a present obligation. So accounts payable, notes payable. Accrued expenses. This is another one that I think might be confusing for people. It has the word expense in it, but it's a liability. Accrued expenses. Accrued expenses are a liability. They're liabilities that we accrue at the end of the period, and we'll talk more about that in more detail as we move forward in this class, okay? We're just kind of doing an overview now. Salaries payable, interest payable. This is another one that I think can be confusing. Unearned revenue is a liability, but it has the word revenue in it, and I can see some of you saying, I think that must be an income account. Unearned revenue is a liability. Can anyone give me an example of something that might be unearned revenue? Rental security, right, or someone pays their rent in advance, right? Right, for sure. And any other ones, that's great. Subscription, yeah, subscription. What did you say? Gift cards, right. These are unearned revenue. Those are all great examples. So magazine subscriptions is probably like the commonly used one because people will pay their magazine subscription up front, and then the magazine company has revenue that they have to still send you that magazine for 12 months, right? If you order People magazine, you pay whatever number of hundreds of dollars, right? Hopefully you order like, you know, Time, or I don't know, what kind of like The Economist or something I should be saying in this class, not People magazine, but whatever it is that you order, right? They owe it to you for a year. Or if you join the AICPA, they give you the Journal of Accountancy, right? You're paying for that. You're paying for a membership, but they also give you a subscription over the course of a year. So, okay. More about liabilities. So if assets have a debit balance, liabilities must have a credit balance, okay? And they are also permanent accounts, right? They don't disappear at the end of the year. Unfortunately, we can't say, as just an example, right? You can't say that your mortgage at the end of the year, well, the year is over, I don't owe that money anymore, right? Unfortunately, you still owe that money the next day, right? Wouldn't that be great? You have $150 in the bank. You can take that as long as my mortgage ends too at the end of the year. That will be just fine with me, right? Okay. So we did our assets equal liabilities plus